Welcome to the Real Estate Wife Show. I'm your host, Vinky Lumba, and today our guest is Luke Diabru. Luke is a managing partner for Make It Rain Capital, a private equity multifamily investment firm focused on acquiring apartment properties. Luke has 11 years of industry experience in commercial and residential space. His goal in real estate is to create generational wealth, leave a legacy, and provide a better life for his family and community. Welcome, Luke. Oh my God, I love your mission already. So today we'll be talking to Luke about the passive investing in real estate, his journey, and his secret of success. So welcome, Luke, to the Real Estate Wife Show.
Yeah, thanks for having me on, Vicky. It's great to finally be doing this. I know we were planning it for some time, so I'm glad we're finally connecting.
Yeah, I'm super excited to have you today. So before we get started, let me ask you, can you share a little bit your background with me, and how you started and how you became what you are today?
Yeah, so I grew up in a very entrepreneurial family. My dad, he was an immigrant. He came from Trinidad to the States when he was in his early 20s. And so growing up, it was very normal to start businesses and to always have kind of something going on. He did so many different things growing up. And so that was very normal for me as a child, even when I was in elementary school. So when I was in my 20s and looking to invest and looking to start, and I had started other businesses like when I was in quote unquote businesses when I was in high school, even like I sold stuff on eBay and like I tutored people and I was always doing something, right? But once it came time to like formally start something in my mid 20s, I ended up looking to real estate. And I specifically looked to rental property and to multifamily. And it's because my parents had, by the time I was 18, they had two single family residences that they would rent out, right? And so I understood the power of real estate in that respect. But then I also saw, well, I didn't want to go into single family because I understood the risk associated with it as well, with occupancy, and then how much operational expense there is and things of that nature. And so I ended up reading Rich Dad Poor Dad when I was in my early 20s. And then I was sold on multifamily. I was sold on apartments. That was 10-ish years ago that I read that book, Finky. And I was looking for a way to ultimately get started because I wanted to be able to invest. I had an entrepreneurial bug. I wanted to end up doing this. And it wasn't until I found syndications and passive investing that I had the opportunity to. At the time I lived in LA, the rental market and the real estate market there is competitive, of course, but then also it's hard on cash flow. The landlord tenant laws aren't great in terms of being a landlord or an owner, and the business friendly environment isn't quite there. And so I just was never quite on board with investing into California. And so once I had the opportunity to invest passively in Texas and Central Texas, I was ready and I jumped at the opportunity and ended up starting from there, really.
Oh, wow, that's great. So let me go back and ask you a question about the rich dad and poor dad. So your family was entrepreneurs anyways to begin with, but when you read the Rich Dad Poor Dad book, what was there? Was a mind shift, or what was there that really kind of brought you into the entrepreneurship versus looking for a W-2 job because you have so many degrees behind your name?
Mhm.
You are you have masters, right? A couple
Right.
masters maybe, right? So
Mhm.
you did not take the regular route that anybody will take after getting their MBA degree or masters in the business administration and going for some CEO position in some company or something. Instead, you thought, oh, let me go ahead and then explore the real estate side of it or the entrepreneurship.
Right. Yeah. In reading Rich Dad Poor Dad, it was just so simple and concise. And there was all these things that were there in the book that I knew to be true, but I just hadn't seen it formally written down anywhere before. There were all like these truths around how wealth gets built and being able to like understand finances that I kind of had seen growing up and I understood at a certain intuitive level and it made so much sense to me. I just hadn't seen it clearly explained so well, so succinctly, so concisely ever before. And so a lot of that resonated with me. And so, at that point, I was like, well, this makes sense. Let me end up doing this. I will end up saying, though, I ended up finishing graduate school when I was 23, and I got a master's in engineering at the time. And that's when I read Rich Dad Poor Dad. And since then, I still have had W-2 jobs, but I've started like 2 or 3 companies along the way. I've always started something, right? And like with starting Make It Rain Capital a few years ago, it's like, well, every other company that I was starting before, I was in my early 20s and my mid 20s, I was going to put all the profit into real estate anyway. Like that was always my plan with
Wow.
these other businesses that I was starting. And so as I got older, I figured like, well, what am I doing? Let me just short circuit this in part. That was part of the reason to form Make It Rain, and get onto the general partnership side and get onto the active side. And let me just do this instead of kind of circumventing or kind of fiddling around with it. Let me just go direct and end up doing it.
And since you're talking about Make It Rain, let's talk about that. How did you come up with this name, first of all, Make It Rain?
So we Daisy and I were looking to start a podcast, right? And this was about pushing 2.5 years ago now, right before it was literally right before COVID started. And people knew that we had invested passively at the time. We were engaged. We weren't yet husband and wife. We hadn't gotten married, but people, our friends, our family, they knew it. We had invested passively. They would ask us a lot of the same questions around like, well, how do you do this? How do you get started? Like, why that? Isn't that risky? All these sorts of questions that people end up having early on, Vinky. And so we figured, well, let's just make a podcast and kind of see what happens. Let's just start one and answer and address these questions. And the thought process was, well, we can answer these questions. We don't need to do it over and over again. And then it's able to reach more people potentially who are just like our friends and our family. And with that, we actually ended up sending out a survey to a bunch of people who were literally our friends and our family. And part of what I'd heard before, years before, around like starting a company or starting just anything marketing related or sales related, was to scratch your own itch. And so that's why we ended up focusing so much on millennials. Both of us are millennials. And we ended up surveying our friends and family around, well, what the name should be. And we had a lot of them were puns around money or real estate. There was like sound interest. And then there was like, I don't even remember so many of them, but it was like House of Cards. It was just anything that was either money related or real estate related. And so we sent out a survey, and Make It Rain was the name that like floated to the top for a podcast name. And they're like, okay, let's just call it that. Worst comes to worst, we have 5 episodes and then nobody listens to it and then we stop.
Wow. I think that was really good. Make It Rain.
Yeah, yeah, it seems
Hey, yeah, it
it's
sticks, right? Yeah.
yeah, it sticks. And like it's I don't know, it's very millennial-y, if that's a if
That's what I
that's
was
the
gonna
word.
say.
Yeah.
That's good. So let me talk about the millennials. So how you guys mindset different than the people or the older people in the real estate industry? How
Well,
you are perceiving real estate?
I think I think part of it is, as you inherently, as we get older, we kind of get more ingrained in what we think is true and what we think is false, and all these rules that the world comes up with. And I think approaching it earlier on in life than other people have, we didn't have preconceived notions around what we should or shouldn't do. Like, I know we've gotten feedback, like some people thought that our name was unprofessional, right? For Make It Rain, because a lot of times investment firms are very traditional names, if you will. A lot of times it's like trees, or it's just an adjective of some sort, and we didn't go with that. But we were looking at it just differently. It was like, I don't know, like, well, why not? These
Yeah,
rules are all,
right.
the way we kind of looked at it was like these rules are all just made up, and so we can make up whatever new rules we want to, right?
That's true.
And so that's kind of how we approached it, Vinky. I think that's how we approach it differently than maybe if I was 10, 20 years older. I'd have past experiences that inform what I want to do, and with us being a bit younger, we just don't have those in quite the same way.
Yeah, I can agree on that because the new generation is all about experience. And I think the new generation is more aware and little bit less limitations because they wanted to break all the limitations and live the life to the fullest. That's
Yeah.
how I see, that's why all these new companies are popping up like Uber or Dashdoor or whatever, because nobody believes in hoarding. Like, our generation was more like into hoarding stuff,
Right.
as with our background, where we came from, let's buy this better car, this and that. And new generation is all about experience. Okay, we got the money, let's experience this, let's travel, let's see what's all around us.
Yeah.
So
That's
I
a
think
very good.
that's a change. Yeah.
Yeah, I was gonna say, I think that's a very good point because I was just looking up data this morning around like even build to rent offerings that are out there, and that's happening so much more. I mean, so many people are, if I was born 30 years younger, I just bought a house at 33. If I was 30 years younger, I probably would have bought a house at like 25, right? Or even 23 or
Right.
something like that. But it's a lot of that we Daisy and I we ended up delaying for a lot of the reasons that you were talking about. It's like, well, I wanted to live in these other places, or I wanted to live in a city, or I wanted flexibility, or even with build to rent, right? It's like, well, people can have their cake and eat it too. They can live in a home and still have flexibility of the rental piece of it. So I agree that, we as millennials outsource and kind of
Mhm.
rent rather than own so many different things now than Generation X or the baby boomers have.
That's true. And they are, like I'm saying, this generation is more aware. They know life is all about creating experiences. So they wanted to experience everything right here, right now,
Yeah.
versus waiting, oh, when I'm going to be 100 or when I have $100 million, then I'm going to do something. That's the previous generation, right? So they
Mhm.
never get to do anything. So that's the mind shift. I mean, that's how I see it. So let's talk about your journey, because I saw in your profile that you have 445 units as an LP, and then you have 280 units as 18 units actually as a GP. So I wanted to understand your trajectory, how you started. I understand you were saying earlier that you started as an LP and then you moved into the GP role. What was that journey like? So if you can share that with us.
Yeah, so it was interesting because the two deals that I invested in as a limited partner actually met with the sponsor in person because he lived in LA. I lived in LA at the time, and he ended up saying to Daisy and I, "Oh, you guys should look at doing the GP side at some point," And I figured, no, I don't want to do that. That's like that. I'm not doing that. It's too much work. I just want to put my money in and just be fine with it, right? This is I'm like, well, this is how I've gotten involved in real estate. I've gotten involved in real estate passively, but over time, as we looked at it more and more, I think the flexibility, there's way more responsibility, of course, being a general partner and being a sponsor as opposed to being a limited partner. But over time, the flexibility and the ability to end up building wealth and then also helping and addressing the needs that people have to invest too, because so many people, I mean, you talk to people constantly about this, right? And you've worked on many projects. People still, even though we all know within the industry about this, there's so many people who still do not know. It's pretty amazing that's the case. And so, after about 2-ish years of being limited partners, um, Daisy and I ended up looking at like, well, what would general partnership end up looking like? And then after we started the podcast, after a few months, I mean, it was COVID, right? It was in the middle of the summer, and we looked at, well, what if we just end up what if we move, like what if we go and get on the GP side? And so we ultimately ended up doing that, and we moved into the markets where we had invested in Central Texas. So both of our investments were in San Antonio as limited partners, and then we ended up moving to Austin. And something that was beneficial with that was that, rather than both of us working our W-2s, I still continue to work in a W-2. I still do work I work at a startup here in town, but Daisy was able to leave hers just because of affordability, and she's a full-time real estate investor now and a real estate professional per the IRS guidelines. So, you know, uh, I ended up looking at that to end up just making more strides and making more progress. We had seen that people who moved into the markets and who were local in the markets or had a local presence ended up making more progress. And so we figured, okay, well, let's try to do that. So moved to Austin, ended up working on a project here, on a deal here that we're actually, it's on the market right now. It's on the market to be sold, which is awesome. So hopefully that comes to fruition, and everybody involved ends up doing really well, ourselves and our investors as well. and then ended up being able to partner on another deal actually out in Tucson. We're able to build so many more broker relations here, actually understand the market at a deeper level than we would have if we were only looking on a screen or having to travel every week or two. So, moving to the markets it was a big commitment. I mean, we didn't know anybody in Texas. Really, we didn't have any friends. All of our family were in California. We were lifelong Californians, born and raised. Went to school in California, but we ended up doing that just because we saw it as an opportunity. We saw the possibility that was available, and the fact that Daisy was able to work on make it rain and be an active investor full time, as opposed to only both of us being part time, ended up moving things forward much more than we feel like it would have otherwise, Vinky.
Wow, great. So let's talk about it. When you GP first time, how did you get that role?
That was through we actually met, or I met one of the sponsors the summer previous. So summer of 2020, I met one of the sponsors online, like on LinkedIn, like so many other places. You end up meeting people, making connections, and we ended up chatting. And then they knew that, and then we met them in October because we had sort of a honeymoon business moon. Rather, we got married in October of 2020. Rather than do an actual honeymoon, we did a business moon where we were in Dallas and Austin for a week and delayed our honeymoon until the following year, just because it was COVID. You couldn't really travel anywhere anyway. So we met them then, and then like there's this relationship that was getting built over time, and this was their first deal. It was off market, and they ended up coming across it, and they invited us to be a part of it. And I think the fact that we were local there and had been for at least a few months ended up making a huge difference. And so that was a way to essentially get our feet wet and get started. And so ended up working on the capital raise, and then have been supporting asset management as well during the hold period too.
So capital raise, what was the first raise like?
It was I think it was more challenging than we thought it would be, right? Because you end up thinking, okay, you have all these people want to invest. You end up thinking this, and then you go out there, and there's a time crunch, right? Of course. And it ends up taking longer, and it's harder than you thought it would be. So there was a lot of learning lessons out of that. And one of the major ones, Vinky, was that we needed to have an investor management software. And so right after that, we ended up investing into one, and ended up getting a subscription to one. So that way we could manage investors. That way we were able to have an investor questionnaire. That way we're able to track things much better, rather than, because before we were on a spreadsheet, which worked, but I mean it's just tough, right? It can work for some time, but after a while it becomes tough. And so it was challenging, but like so many other things that are challenging, like you end up learning a lot, and it's a opportunity for growth, and that's kind of the way that we looked at it. And it was a very good decision that we ended up making to do that ultimately.
Did you check out multiple softwares, or which one investor management software you recommend?
Yeah, so Daisy ended up leading that effort. She ended up talking to several contacts that we had, probably around 10 or so, and trying to understand, well, what did they end up using? We looked at several. We looked at, and I can name them if that's helpful to the audience. We ended up looking at Appfolio. We looked at Juniper Square. We looked at Groundbreaker, InvestNext, Syndication Pro. I think that was the list. We ultimately went with InvestNext, and it seemed like it was the best value for the price and the features that we needed, right? Like, I think if we had $2 billion in assets under management, we probably would have gone with like a Juniper Square, just because of the features, and it's more robust. But with where we were and where we were starting, InvestNext is what made the most sense for us. And they've been great. They've been extremely responsive when we have questions, and there's constantly features that are getting updated. And so it's a good customer experience, not only for us, but then also for our investors. And so yeah, I'm glad that we ended up going with them.
Oh, that's good. So invest next question. Are you co-GP with the other sponsors, right? So you have your own set of investors. How do you plug into their management piece, just being your own entity by yourself as a co-GP?
And do you mean like how do we manage investors with given what they have, or what do you mean?
Right. I mean, they have their own set of investors, right? So they have their own communication channel, how they're communicating with the investors. So you created a separate entity than them, right?
Right.
So how do you make sure that the same communication goes through your investors seamlessly without having any changes?
So what we'll end up doing is the lead sponsor, right, who's leading asset management and the business strategy execution. They will send out their updates to us, right, typically a day or two before they go to all of the limited partners. And what we'll do is we'll end up taking that, we'll adjust a couple of things, right, put it in our own format the way that we want to speak and communicate to our investors, and then we send that out. We do that for two reasons. I mean, one is that we're the ones who have the relationship and own that relationship. And so we think it's important to continue doing that. And then two, it's a matter of making sure that we're communicating in the way that we want our investors to be communicated to, rather than kind of outsourcing or handing that off to somebody else.
Right. Did you join any mentorship program to learn all these things and then got to figure out how to manage investors and everything?
I didn't, Daisy didn't either. Like a formal mentorship program, the one that costs, tens of thousands, 20, 30, 40 grand, whatever it might be. We didn't end up doing that. What we ended up doing instead was just pretty much always showing up and then asking questions and then building relationships. And that's kind of how we cut our teeth. Maybe we would have fast tracked it by doing a mentorship program. There are some people who've done those who've had great experiences. But it just didn't seem like the right route for us. And it wasn't something that we were, quite on board with. It just wasn't something that we planned to do. We did end up doing two different masterminds, which weren't quite mentorship programs. It was more of a high level networking and then educational pieces. But I mean, we got some relationships out of those, but ultimately it's a mastermind, right? And so it's a little bit different than a full-fledged coaching program as well. So I didn't do a mentorship program. I don't know that obviously it's not required to become a general partner, right? It can help some people. Everybody's different. I'd say make your own make your own choice for yourself, whatever works best and what works best for you. But for us, it just wasn't in the cards.
Yeah, but I think the key thing is even you join a mentorship program, you have to do all the work yourself. That's the point. People need to understand that. Because by joining the program, giving somebody $50,000 or whatever the fees is, it's not gonna make you a sponsor or a GP or co-GP, whatever your aspiration is, you have to work for it. So if you can do it without joining a mentorship program, it's good
Mhm.
too. But having a mentor is good too, not necessarily you need a real estate mentor. Any mentor in your life is good. It could be your parents, your teacher, your friend, because there's mentors all around you. You just wanted to kind of not reinvent the wheels all the time, kind of follow the path that's already been laid out, right? As long as you
Right.
see that you're going to be successful like you guys did. And I'm so happy for you guys. You are
Yeah.
doing awesome. And then let's talk about your networking skills. You mentioned then you network a lot. So can you share with us which networks work for you or which are the good ones that people can join?
Yeah. Yeah. The thing that's been the most fruitful in terms of networking for me has really been, I'd say it's really been LinkedIn. I've met so many people, and I think I may have met you on LinkedIn. I'm not quite sure. Like LinkedIn is huge. I think the meetups, I mean, there's so many meetups that people are able to look at. It can be regional, right? It can be topical. It can be based off of asset class. Like there's all these different meetups that are out there. There are all different times of the day and week and everything like that. That was earlier on. I don't do the meetups quite as much anymore. But that's because of just like the nature of what I focus on within Make It Rain now. But that was instrumental early on for me. I mean, the Zoom meetings and all of those, especially early on in COVID, I mean, that was huge. So I'd say it's really those two. And the reason I say those two pieces, I mean, secondarily like Instagram, Facebook, things of that nature. But I feel like you can end up learning a lot about people on LinkedIn, and there's a certain professionalism on the platform as well. And so that was helpful for sure. Outside of that, Vinky, last thing would be like in-person meetups. Those are, it can be something that's through a group, or it could be something that's through a certain vendor or things of that nature. I mean, there's some pretty big ones that happen every single year, or it could be national ones that are these major organizations, right? So those are super beneficial as well. They don't come around as often, right? But those are very good to do too.
Yeah, I like that, the way you said it. The key is showing up and building relationships.
Yeah.
Okay,
Yeah. Hmm.
I like
Yeah, you
that.
have to be there. Yeah.
Yeah. So far, did you guys have any bad experience? Did you lose any money in any of the deals, anything like that?
Knock on wood, thankfully not yet. No. No money lost. I mean, everything has been moving forward smoothly, and everything's been going well. I mean, admittedly, there's not a huge sample size, right? There were 4 deals, two passive, two active. But yeah, we haven't yet. And the plan is to not lose not lose money ever. I mean, early on when I was looking at passive investments, the first deal I actually underwrote myself. So I took the pro forma that the sponsor had, and then because I have an engineering background, so I just built the spreadsheet, and then I was essentially doing sensitivity analyses on it. And my goal was like, what Warren Buffett says, right? Rule number one, don't lose money. Rule number two, see rule number one. And so I looked at it like, well, how bad do things have to get for this thing not to cash flow? And at the very least, I wanted whatever chunk of money I was putting in, I wanted it to be retained. I was very hopeful and wanted to end up making a return, but I wanted to cap my downside risk. And so that's a benefit, I think, broadly speaking, of multifamily. It has very solid risk adjusted returns compared to other asset classes, not only the public markets, right? But then also compared to other industrial or office or retail, right? And so that was something that was top of mind for me. And so knock on wood, long answer to a short question, but yeah, hopefully, the plan is to never lose money. Haven't lost money yet, and not to lose money in the future either.
I like that. Can you share with me what kind of strategy that you have built for yourself to figure out what is a good deal versus bad deal? Because since you said you created your own spreadsheet, you plug in the numbers and kind of double check the underwriting of the sponsor.
Yeah. So are you thinking on the limited partner side or on the general partnership
Both,
side?
right? It's
Okay.
good for both, right?
Yeah.
Because I think limited partners should check the numbers too before they're investing. And similar goes for the GPs too, or the aspiring GPs, because they should check the numbers before they're taking somebody else's money to put in somebody else's deal.
Yeah. Yeah. So on the limited partner side, I mean, I see a lot of deals now. Like, I'm connected, and I'm sure you're connected. I mean, you're connected to so many sponsors. And so when there's a deal, I end up looking at them probably half the time. I look at the underwriting. I'll end up, if they have their spreadsheet, I'll end up looking at that. Sometimes you need to ask for that. But I'll at least look at the pro forma, and it's like, okay, are these assumptions reasonable? In Texas, right? Especially Central Texas, because that's what I know. I look at assumptions around taxes and where those are going to go. I look at assumptions around insurance and where that's going to go, because those have been going up a lot over the past several years. I'll look at rent growth, right? And it's like, is this reasonable? Are these numbers actually reasonable? Can this be achieved? Those are some major things that I'll end up looking at. And then the debt. It didn't matter as much maybe 6 months ago because it wasn't on everybody's mind, but now it matters a lot. And so I'll end up looking at that too, to be able to understand, what's going on. Secondarily, though, outside of market, I'll look at the business strategy too, Vinky, if it's a limited partnership deal. And, I just look at it just for my own sake now at this point. But if it is a deal that I'm going to be a lead on as well, and I'm going to co-GP with somebody else, and I'm going to raise for it, let's say, then I'll try to understand, like, oh, if it's a value add play, like, are you hiring a GC? Are you managing it? Is your property manager managing it? Have they managed these types of deals before? Have they not? Have they executed this business strategy before? Have they not? It's okay if they haven't, but there just needs to be a lot of weight behind it saying, yeah, they haven't, but X, Y, and Z is what we're doing in order to de-risk our situation, in order to make sure that we're able to drive returns. So yeah, those are what I'll end up looking at, and at least on the limited partnership side, or if I'm going to co-GP, if I'm going to be a lead sponsor, right? Because we do so much underwriting. I mean, we moved here to be able to do that and to have broker relations. Um, it's really like, can we get the returns? Do we feel confident that we'd be able to get the returns that our investors are expecting, and that we can end up saying that will provide to them, and that this deal will end up providing? And if we can't end up doing that, then we end up shying away from it, ultimately.
Great. So what is your current focus now? Or I should ask you, wearing your millennial hat, what do you see the future is gonna be in your eyes for real estate?
Um, I think that I think ultimately more and more people will rent. I think more people will continue to rent over time. Part of that is just generational and the experiential piece that millennials want to have. The other part of it too is the affordability piece, and wages for adjusted for inflation being flat for the past 50 or so years, right? Asset prices have continued to go up. It's becoming less affordable for people, so they need a place to live, and they're going to need to rent. And so looking at that is something that I end up seeing continuing on, for sure, into the future. I think that I don't see how or why any of that would end up changing. And so that's something that's for sure top of mind for me. I am very focused, and we're very focused on areas where there continues to be growth, and where jobs are incentivized, and where companies are incentivized to be. And so long term, like, very bullish on Texas, because it's done well thus far, and it's incentivized a lot of companies to end up moving here. Of course, like, everyone talks about the tech companies, but there's a lot of just, regular industry, so to speak, that's here too. And so, looking at the market, I'm very bullish on, like, Texas, and then other similar markets as well.
Great. So share one golden nugget with my audience.
Golden nugget. I think doing is faster than reading. That's what I would say. Yeah, it sounds so cliche. Everyone says, "Oh yeah, take action, take action." You just have to end up doing it before you really know what you're doing,
Exactly.
because I always feel like it's better to, move quickly and take action and just do something, knowing that it's not quite the right thing, because you don't know what you don't know. You have to learn it somehow. Either you're going to end up, I guess, learning it theoretically, or you can just learn it by taking action. And it's like, maybe you'll embarrass yourself, maybe you'll have egg on your face, but you're going to look back in 5 years and thank yourself for doing all of that, right? So I think it's overcoming that. Doing is faster than reading.
I like that. Yes. So this brings us to our vibe rapid fire round. I'm going to ask you 5 questions, spontaneous answers, one word or one sentence only. Ready?
Ready.
What is one of the best skills that you have learned that it works for you all the time?
Um, Being able to work hard.
Great. What is the best book that you have read and recommend? Other than
The
Rich Dad Poor Dad.
I will say the Almanac of Naval Ravikant.
Great. What is your biggest passion?
Biggest passion. I think it's making sure that the sacrifices that my parents and my grandparents made were worth it, and I'm able to fulfill my potential.
Wow, I love that. In one word, what does life mean to you?
Gift.
Oh, awesome. If you got a chance to change something, what would it be in your life?
Oh my, geez, change something. I don't know. I I literally looked outside and I thought the weather, because it's 100 degrees right now and I live in Texas and it's 100 degrees for 4 months. That's literally what I thought, Pinky. I know it's kind of not a great answer, but that's what I got.
That's good. How can people reach out to you, Luke?
The best way is to go onto our website. It's makeitraincapital.com, or you can also email me. My email's on the website, but it's Luke, LUC at makeitraincapital.com as well. And that's the best way to get in touch.
Thanks for coming to the show, Luke. I really enjoyed it.
Yeah, thanks for having me on, Vinky. I appreciate you taking the time, and thanks for everything that you're doing for everybody out there.